I'm Jamie, Co-op Credit Union's Chief Lending Officer. Homeownership is a journey, sometimes thought of as a scary one. Come on in and let us take the worry away with our roadmap to homeownership.
Hi, I'm Amy, Mortgage Loan Officer at Co-op Credit Union. Some of the biggest questions that we often hear from potential home buyers are, can I afford to buy a home? Is now the right time for me in my current financial situation? Where do I start? Well, you have already started. You have gone out of your way to learn and prepare. Purchasing a home is a big investment, and it is important for you to be in a good financial position when making that decision. We can help you analyze loan scenarios, down payment requirements and options, and even help you understand typical costs involved in purchasing a home. So, what do you need to be prepared? We will be looking at the C's of credit, which are character, capacity, capital, and collateral. We will look at supporting documentation, such as proof of income. This can be provided by a W-2 statement, a pay statement, or tax returns. Credit. We will review your credit report, looking at past credit performance, required payments already in existence. We will then calculate repayment ratios based on your future home loan payments. Proof of assets. We will often ask for financial statements or investment statements to provide proof of your down payment sources. Other documentations you may be asked for: proof of identification, such as a driver's license, social security card, or ITIN. With all that information collected, we will be able to calculate a loan amount the credit union will be comfortable lending to you, what your down payment would be, roughly what your monthly payment will be, and move forward with your pre-qualification letter. Having this information up front will allow you and your realtor to make an informed decision when choosing a home to buy. It's now time to start looking for your dream home. Congratulations! You have found that perfect home, and your offer to purchase has been accepted. Let's uncover some of the initial costs associated with purchasing your new home. The first cost in the process is earnest money deposit. This is a deposit made at the time of the purchase agreement. It shows your good faith in buying the home. Earnest money paid at the beginning of the process is later applied to your loan closing costs or down payment requirements. We will be asking you about your down payment. This could probably be one of the most frightening thoughts of buying a home. Am I going to have to drain my savings account in order to purchase a home? Well, it's true. The more money you have to put down, the lower your monthly payment required will be. It is not always beneficial to drain your reserve funds. We will help you find that happy medium. There are often programs available for qualified buyers that can assist with down payments. During our member appointments, we will analyze all your options with you so you can make the best decision for your situation. Items that are paid by the borrower when purchasing a home will be your first year of homeowner's insurance premium, possibly even flood insurance if it's required, the initial escrow deposit for your future real estate taxes and home insurance, and any type of home inspections that you may choose to have. This could be well, water, septic, or basic home inspections. Loan documentation fees, credit report fees, title insurance, and appraisal fees, just to name a few. The cost of purchasing a home doesn't have to be scary. Now, let's hear from Brooke on some of the things you want to avoid when you're financing a home.
Hello, I am Brooke, one of CCU's mortgage loan officers. Here are a few things to avoid during the financing process. The following actions may have a huge impact on your closing. Make sure to speak to your loan officer if any of the following could happen before closing. Changing jobs. A job change can result in your loan being declined, particularly if your wage decreases. Changes in marital status. How you hold title is affected by your marital status. Make sure both your loan officer and the title company are aware of any changes. Paying off existing accounts. If your loan officer advises you to pay off a certain bill, please follow that advice. Otherwise, leave your accounts as they are until after closing. Large purchases. A major purchase, like a new car or a large unplanned vacation, may cause your credit to change and your debt to grow, impacting your debt-to-income ratio. Switching financial institutions or moving money. After your loan officer verifies your funds at one or more institutions, the money should remain there until after closing. We get that emergencies happen, and if they do, make sure to be upfront and honest with your loan officer to help ensure a smooth closing. Now that we have the don't do's out of the way, let's hear about some of the loan products and services CCU has to help you on your journey to homeownership.
Hi, I'm Kylie, the Gilsville branch manager at CCU. Let's talk about the down payment assistance grant. At Co-op Credit Union, we can apply for the down payment assistance grant on your behalf to assist you in funding the down payment and/or closing costs associated with purchasing a home. To qualify for the grant, you must meet certain income requirements and contribute a minimum of $1,000 of your own funds to the transaction, of which none can be gifted funds. Currently, the grant can provide up to $10,000 to aid your purchase. In total, you could have $11,000 for your down payment and closing costs. This program can only be used for primary resident purchases. Additionally, you would need to complete a home buyer education course and a one-on-one telephone counseling session during the qualifying process. The household income limit factors in the total household size and the income of all working members of the household. The income limit is also based on the county you are looking to purchase in. Since this is a grant, you pay no interest on the funds you receive, and as long as you maintain ownership of the home for a 5-year period, it will be forgiven. If you sell your home before the 5-year retention period ends and receive proceeds from that sale, you would only be subject to a prorated repayment amount. It is really a win-win program we are excited to offer our members that seek their home financing through us. Alex will now go over the home buyer education course and the one-on-one home buyer counseling session with you.
Hi, I'm Alex, CCU's Onalaska branch manager and lender. You heard about the down payment assistance program that we can help you apply for. One of the main phases of that process is the home buyer education course. There are 3 online options available, and information about the online home buyer education courses and a direct link to each can be found in Section 5 of CCU's Home Financing Guide, located online at coopcu.com. The first option is NHS of Southwest Wisconsin, is $99 for the online course and additional fees for the one-on-one counseling course. This course can be found on the website ehomeamerica.org. The next 2 options can be found at learn.frameworkhomeownership.org. CCCS of Sheboygan is $75 for the online course, with additional fees charged for the one-on-one counseling course. And Neighbor Works Blackhawk region is $75 for the online course, with additional fees charged for the one-on-one counseling course. We have had members complete these online educational courses and have reported the information received to be very beneficial and well worth their time and investment. There are no restrictions to participate. The education is open to anyone. It's designed to take 6 to 8 hours, but can be completed at your own pace. Once the education course is completed, you will participate in a follow-up telephone interview and then receive a completion certificate for both pieces of the education. These courses create knowledgeable buyers ready for a lifetime of home ownership. In addition to the courses, you will also have access to a nonprofit housing counselor who can help you better understand the home buying process if you still have questions after the completion of the course. These are fantastic educational offerings to have access to, and we feel that they provide a great wealth of knowledge. So even if you do not qualify for the down payment assistance grants and you choose to complete the courses, Co-op Credit Union is offering a $250 credit to be applied towards your loan purchase closing costs, just for furthering your knowledge on the home buying, home ownership process. All you need to do is provide your loan officer with both of your completion certificates, and the $250 credit will be applied to your home purchase closing transaction. Now let's hear from Jamie about the mortgage lending products CCU has to offer.
Hi again. Picking the right mortgage product might seem like a daunting task, but don't worry. Your loan officer is here to explain each product to ensure that we find the best option for you. CCU has adjustable rate mortgage loans, fixed rate loans, construction loans, home equity lines of credit, manufactured home loans, and 100% financing options. Adjustable rate mortgage loans, also known as ARM loans, can be repaid over a 30-year time frame with a 3, 5, 7, or 10-year interest rate and payment lock. This means the initial rate and corresponding monthly payment will not change for the selected time period, but after that, the interest rate and corresponding monthly payment may adjust up or down on a yearly basis. You as a borrower are protected from extreme changes because ARMs do have interest rate adjustment safeguards that limit the amount of an annual change, as well as interest rate floors and ceilings to protect maximum changes over the term of the loan. We also offer 10, 15, 20, or 30-year fixed-rate loans, meaning the rate is set for the entire length of the loan. These loans provide you the comfort of knowing that your interest rate and payment amount will not change throughout the course of the loan. Maybe you're looking to build your dream home instead of purchasing. With our construction loan, we offer interest-only payments for up to 12 months. After the 12-month period, we will rewrite your loan into fixed-rate financing or an ARM loan. Once you own your home and have sufficient equity, you can open a home equity line of credit to purchase items needed to complete those unfinished projects, consolidate your debt, buy a car, or even take a vacation. Payment options are based off the amount advanced from the loan, not the full available amount. If there's no balance on the loan, there would be no monthly payment that's required. There is no annual fee for a home equity line of credit at Co-op Credit Union. We also offer financing for manufactured homes. Those homes can be in a mobile home community or on private property. Lastly, Co-op Credit Union has a unique 100% financing option available that's a combination of a first and second mortgage loan. This is a great alternative to having to pay for private mortgage insurance when you don't have the required 10% down payment. If you have an individual tax identification number, CCU can also help you purchase a new home or even refinance your existing loan with better loan terms. Here is Jorge with more information regarding that process.
Hi, I'm Jorge, Co-op Credit Union's Community Development Officer and Lender. Here at Co-op Credit Union, we are pleased to be able to offer home financing to members who possess an individual taxpayer identification number, ITIN, rather than a Social Security number. Along with your ITIN, we will request supporting documentation such as a current passport or consular ID, birth certificate, original ITIN letter, and IRS Form W-8 to satisfy the identification requirements. For the mortgage underwriting requirements, we will also ask for your most recent 30 days of pay stubs and previous 2 years of W-2s or 1099s and tax returns for calculating repayment capabilities for the mortgage amount being requested. This is just another way that Co-op Credit Union is here to ensure financial well-being for all members. Brooke is now going to share how you can apply for a mortgage loan at CCU in all our convenient ways.
Hi again. I would like to share the ways that you can apply for a mortgage loan at Co-op Credit Union. These ways include in-person, over the phone, and our recently updated online application portal. Let's dive in a little deeper into the online application process.
From google.com, you're going to put in our Co-op Credit Union website, www.coopcu.com. This will take you directly to our webpage. You're going to go to the Lending tab, Real Estate, Meet Our Real Estate Team. On this screen, you can see our entire real estate team, which you can apply with any lender you so choose. You're going to then now click Apply Now, Proceed, and on this screen is all of our contact information for your lender. And then we have a couple of calculators, our mortgage calculator and a refinance calculator for you to play with. And you can apply now at the bottom of the screen or at the top. And if you already have an existing login, you can click the Login and insert your information. You're going to insert your email address here and continue with your email. Once you do that, you need to create a password of your choosing and then hit Continue. This will take you to our register screen. Anything that has a star you need to fill out. So you put first name, last, and phone number. Click the box you consent to agree, and then yes. Now that you have seen how to use our online application, what are the actual advantages? We can send you an application link to the portal, or you can go out to the website to access it directly. The Borrower Portal gives you the convenience of filling out the application on your own time, 24/7, day or night. It's a safe portal for uploading your personal documents to go directly to your lender. You or the realtor are able to auto-generate pre-approval letters as the property or purchase price amounts change. If you get stuck on any portion of the application, the lenders are able to log into the system live to assist you. The application is a great communication tool for all parties involved, as you will receive milestones via text, email, or both. These milestones consist of notifications of your loan being received, in process, pre-qualified, and when your appraisal is ordered received, and when you have that green light of clear to close. These notifications go out to the realtors and to you, the member, so everyone is informed of the file status during the entire loan process and is on the same page and updated along the way. The application portal can be used not only for purchase transactions, but for any home loan product that we offer. Let's hear from Pam about what happens after you have an accepted offer and the process begins.
Hi, I'm Pam, one of CCU's mortgage loan officers. At this point, let's assume that you have a pre-approval from one of our mortgage lenders and an accepted offer for the home that you'll be financing. You have already done the most important part of the purchase transaction. So other than starting your search for a home insurance agent, you can sit back for a bit and let your loan officer take the reins. I'm going to take you behind the scenes, if you will, and talk about what happens after we've received the offer to purchase and a completed application. Your loan officer will now be reviewing any changes or updates to your application and requesting certain tasks to be completed by our loan processing department. The first task will be to have the loan estimates and application disclosures sent out to you. The loan estimate is a document that provides you with information you'll want to know concerning your estimated interest rate, monthly payment, including property taxes and insurance, also known as escrow, and your total estimated closing costs. The loan estimate is required to be received by you within 3 business days from the date we have a completed application. Most often, these will be sent to you through DocuSign for your e-signature. Once you've reviewed these disclosures, it's important that you submit them back to us with your intent to proceed. It's at this time that we will ask how you would like to pay for the appraisal and submit an order request to the processing department. The last item to be ordered from an abstract and title company is title policies. If a realtor is involved in the purchase transaction, then they will normally order the owner's policy for the seller's side, and your loan officer will provide an order on behalf of the buyer, also known as the lender's policy. For a buyer, the property search performed by the title company is vital to ensure there are no existing liens, loans, judgments, or possible boundary encroachments on the property prior to you closing on your new home. Title companies also provide protection for both the seller and the buyer in the event liens or encroachments are discovered after closing. And if it is a for sale by owner transaction, then CCU can order both policies. Once the title policies have been cleared of any exceptions and the appraisal report has been received and approved, your loan officer can now issue the real estate agent a loan commitment letter and schedule the closing date. You will want to have your homeowner's insurance in place by this time, so your closing disclosures can be processed in a timely manner. At least 3 days prior to your closing day, you will receive your closing disclosures. These look a lot similar to the loan estimates you received during the application phase, except instead of giving you the expected costs, the closing disclosures confirms the actual cost of your mortgage and closing fees and the funds you will need to bring to closing. On the day of closing, you will be signing your loan documents with a representative from the title company who will explain the documents you are signing, answer any questions you may have, disperse the funds to any receiving parties, and hand over the keys to your new home. We always hope that every purchase transaction is a best-case scenario, but there are times when a life change happens or choices are made by the borrower that could affect a smooth closing experience. Your home financing guide has a great list of things you can do to help ensure you and your loan officer are communicating and keeping each other informed throughout the process. You heard me mention the word escrow. Katie is now going to share with you what that actually is.
Hi, I'm Katie, CCU's Mortgage Processing Manager. CCU offers escrow accounts for almost all of our closed-end first mortgage loans. There are some cases where we require a borrower to have one, such as if they're in a flood zone, and also most loans with an 80% loan-to-value or higher. We use our escrow accounts to pay property taxes, homeowners insurance, flood insurance, and mortgage insurance if it's applicable. The most common items escrowed for are property taxes and homeowners insurance. A little bit about property taxes. We still offer borrowers the choice to pay semi-annually or annually, and we pay directly to the taxing authority with no need for borrowers to send us their tax bills. We're able to get them directly from the county. With homeowners insurance, we pay that annually, and typically the account is flagged to pay about 2 weeks prior to the renewal date. Sometimes borrowers will change insurance companies, in which case we need to be notified to pay someone new. An escrow account is reanalyzed annually to change the monthly amount that we collect to accommodate the most recent bills for each escrowed item and to see if there's an overage or shortage in the account from the previous year. If there's an overage, the excess amount is usually returned to the borrower via check, and if there's a shortage, we split that amount over the next 12 months and collect it that way. Borrowers can expect to review their escrow analysis every year, and it's very important to look that over as it tells you how much your monthly payment for your loan will change for the new escrow amounts. When payments are made to a loan with escrow, the amount that we receive gets applied to the payment in a specific order. First, it pays the required escrow payment, then it pays the interest up to date, and anything more goes to the principal. If you pay extra above and beyond the minimum required, it also goes to the principal. Escrowed loans are not allowed to pay ahead more than 2 months to avoid a large surplus in the escrow account.
Fortunately, the people working for you at Co-op Credit Union understand that occasional bumps in the road happen. Our knowledgeable and friendly staff is just one advantage of choosing CCU as your lender. We service your loan right here at CCU. Payments can be made monthly, bi-weekly, or weekly for your convenience. If you pay ahead or pay off your mortgage early, there are no prepayment penalties. Monitoring your account is easy with 24/7 access through CCU online and mobile. So remember, our experienced, motivated, and dedicated mortgage team is here to navigate any scenario that may arise and ensure your journey to home ownership isn't a bumpy one.